I heard an expression the other day that a board seat is a very expensive piece of real estate, and you have to use it with care, which means that you cannot waste that real estate with a single issue director. If you have a cybersecurity specialist on the board and he or she is there just because of that specialty, every time we have a cyber issue, everybody's going to look at this first and basically outsource to whatever that person says. And this is not a good board. So communities help, but I don't think that's the best solution either.
The relationship between the company executives and the board is really important. And what's this culture of transparency? What's the culture of really wanting to know what our problems are and not trying to cover things up? So I think that's probably one of the big things when we talk about cybersecurity. People are like, well, I'm not sure who knows that information. Well, we need to know.
Sustainability needs to be attached to strategy, not to marketing or to investor relations, as it is in the organization in charge of many companies.
Lots of process can be done by robots, can be done by AI. Where's the thinking? Where's our choice? And those are the questions the board needs to be asked. Who's making the choice?
Yes.
Is it AI making the choice? Based on what data? Whose data?
I put in a lot of effort to make sure that boards work as they should, because most don't.
There's the discussion of how much do we study before we do it? How much can we test? What's it going to cost? Can we lose the money? Is it losing the money if I invest in learning? If I invest in trying something new, is that losing money? So, if you look at the balance sheet, you've only got investment, costs, and expenses. Where's innovation? Where is it?
Why is that person sitting there? And that has to do with board evaluation, succession planning. How long should the director be on that board? Do we have a target for that? Because there is a learning curve, and then a period when the director sort of becomes stale and eventually counterproductive.
Future Hacker. Life. Path. Future.
Hello everybody, and welcome to Future Hacker. I'm your host, Maria Taiji, and today we're doing another roundtable, this time about the boards of the future, with two very special guests, Sara Hughes and Mauro Cunha. Did I say it right, Sara?
Yes, Hughes. Thank you very much. Great.
Welcome, Sara. Welcome, Mauro. Thanks for giving us this opportunity for a great discussion ahead. Welcome, Mauro.
Happy to be here.
So let's first give it a background for the listeners, right? So in today's rapidly evolving corporate landscape, the role of company boards has transformed profoundly. Once tasked with mainly supporting shareholders, modern boards face a new paradigm. They are now expected to embrace a broader spectrum of responsibilities, including corporate social responsibility and making a positive impact. The market demands diversity, inclusion, pushing boards to explore new horizons. Amid these changes, the concept of fiduciary responsibility remains central, but it's being challenged by a series of high-profile corporate governance scandals that have sent shockwaves through the business world. Today, we have those two very special guests, and we're going to discuss the evolution and possible path of corporate governance and the board's responsibilities and challenges. So let me introduce you to our first guest, Sara Hughes. Sara is president of the board for FBN Brazil and the co-founder and CEO of Scaffold Education, a technology platform for individualized learning for corporations in constant transformation. She's currently on the boards of several companies and institutions. She's involved in impact investing, angel investing, microcredit for women entrepreneurs, and a board consultant for Family Talks, an advocacy program for public policies that promote family bonds and gender equality. And to join this discussion, we have Mauro Cunha, an independent director with more than 27 years of experience in capital markets and corporate governance. He's one of the top corporate governance voices in Latin America, currently serving as a board member of Embraer in the Audit Committee, AES Brazil in the Sustainability Committee as well, Klabin, and Hypera Farm. He has also served on the boards of some of the most important companies in Brazil, including Vale, Petrobras, Caixa Econômica Federal, Usiminas, chairman of the board of EBGC, among others. So you see, we couldn't have a better team to discuss this today. So thank you both once again. And I'd like to begin today with Mauro. And Mauro, you have been deeply involved in the corporate governance landscape for this extended period of time. You've had the opportunity to witness many significant developments and challenges in the past decades. So from your experience, could you highlight the most noteworthy events, key changes, or pivotal moments that have left a lasting impact on corporate governance during this time?
Oh, yeah. This is a very broad question and might require a very long answer. I'm going to try to be as brief as possible. We've seen lots of changes in the corporate governance landscape, both in Brazil and globally. And it is a challenge for managers and board members to navigate these changes and make sure that we stay current and that we are able to add value to our organizations. In the case of Brazil, we have certainly evolved from a very closed capital markets in the 80s and 90s to a more globalized one. Certainly the creation of the Novo Mercado was a landmark in this journey, as it created a special listing segments following the one share, one vote principle. And that opened the way for a large wave of IPOs over the following years, which raised the number of listed companies in Brazil from 300 to 500 roughly. So in the meantime, what has happened there was the creation of several corporate governance models that some of which didn't exist before. So we used to have the traditional family-owned companies, lots of state-owned companies, and some subsidiaries of multinationals. Some of these companies are listed. And now we have also models of companies that are jointly owned by fund management firms for private equity, or even without controlling shareholder, which is something very common in common law countries, but relatively new in Brazil. The challenge in governance has been to make sure that we create models to govern these institutions according to their specific ownership situation and culture. So this is still an evolving process. I still believe that we have many companies that have a mismatch between where they are in terms of corporate governance models and their corporate governance structures. But lots of them are making an effort to conciliate the two and therefore add value.
Great, thank you so much, Mauro. And Sara, building on Mauro's observations, right? How do you perceive changes in corporate governance, particularly in the context of, women inclusion and the broader diversification, considering factors like age, races, cultures, and so on? Diverse perspectives are critical in the boardroom. How can boards create a culture that encourages meaningful contribution from diverse members while addressing potential conflicts and egos, right?
Yeah, so I think there's a lot of change, not only about the private public companies. What is private nowadays, right? So what do the public want from companies, right? So it used to be you could do whatever you wanted, right? And the traditional kind of idea of the shareholder was what was important. And now we've got to say, okay, we have a broader group of people that we need to be concerned about. So I think the big change that's been since the beginning of this century is really, let's look at all of the different. In Portuguese, we talk about the not only the shareholder, but who are the other people involved in this ecosystem that are involved. So we've got our suppliers, and we've got the communities, and we've got the employees. Who are the clients? So who are all of these people that are interested in what's going on with the company? So a couple decades back, we started talking about larger companies, whether they're private or not, need to start talking about their decisions and make them public. So the idea that you can have a company and your company doesn't give any assistance to the community, and that doesn't mean necessarily going with social responsibility, but what are the impacts we're creating, right? Both your materiality impacts, your externalities. So I think that's a big change that's been happening over the last couple of decades, is that we have to have a broader view of our impacts of our company. And with that, inclusion becomes really important, because if we have a group of people making the decisions that are all similar, possibly all shareholders, possibly all men, possibly all 60 or above age, what is the possibility that they're going to see all of these different points of view, all these different impacts? So I think we talk about more women on boards, but the big thing is, how do we get a diversified, better discussion in a dynamic world where we've got technologies changing, we've got ESGs, we've got, all of the global development goals from the United Nations. So we have a lot of different things, and of course, security of information. So many things that are changing. We need diverse people to bring out the best decisions and have really rich discussions. So I think that's the big thing, and women are coming on board with that. Younger people are coming on board. It's not so much that you think of a board member always being the CEO that had 30 years of experience. That 30 years of experience in the past might not be the experience that we need in the present. So I think there's a lot of discussion of, we need to have a different type of board.
Exactly. And, I do like what you said, that that's not really what's private and what's public. Like, there's no, with the access of information in general, there's no longer this idea of the owner of the company doing whatever they want and publicizing whatever they want. Like, people are more engaged, and they are demanding more even from the private companies. The public, we understand that there are so many rules that they need to follow, right? And I think that it's going to be a very healthy movement, having people all around engaged and demanding from big corporations to making a positive impact. Mauro, there's this growing movement towards having board members with specific expertise. Like, as Sara was saying, right? There's so many different topics that need to be discussed. And now people are talking about having more expertises on the board, such as cybersecurity. In your opinion, do you agree that this is the right approach? Or should cybersecurity and similar topics be this collective responsibility for all board members, with the establishment of specialized committees, maybe to address them in more details? What are the advantages and potential drawbacks of those different approaches to handling expertise within the board?
Well, I think it's very dangerous and very negative. And as a matter of fact, it's not only a trend. The SEC has already mandated disclosure on the existence of cybersecurity specialists, for example. And you also need a climate specialist and so on and so forth. This is all comply or explain, but of course people don't want to explain, so they comply. And so you end up fractioning the boards just to comply with these expectations. Now, I heard an expression the other day that a board seat is a very expensive piece of real estate, and you have to use it with care, which means that you cannot waste that real estate with a single issue director. If you have a cybersecurity specialist on the board and he or she is there just because of that specialty, every time we have a cyber issue, everybody's going to look at this person and basically outsource to whatever that person says. And this is not a good board. So committees help, but I don't think that's the best solution either. The solution is directors need to learn. We need to invest in continued education of directors so that they are up to speed with some of the emerging issues that were not relevant or at least discussed when directors had their formation. So I see that very few companies take seriously the issue of director education, and very few directors as well. So you see directors go to events and so on and so forth, but to have an honest assessment of what am I missing to be a better director? And starting from the premise that a director needs to be a generalist. A director needs to understand financial statements. A director needs to understand sustainability. If we do not understand these issues, then we're not prepared to be good directors. We need to find our weaknesses and look for ways to improve ourselves, either individually or by means of an institutionalized continuing education program.
Great points, and I saw that Sarah was agreeing here. And that's totally your field, right, Sarah? Do you have any comments on that?
Yeah, so of course, continued learning for directors, and I really like this term that Mauro said about the real estate. We're talking about people that need to be really prepared on the board. And they have to read before, they have to study, they have to really have their, I like to say their radar has to be connected to what's going on in the world. They can't think that what they knew before is still valid. There's a lot of great experiences that they had, but they've got to keep up with what the future is coming, and not even the past, not even the present. Sometimes we have to ask questions about the future. I do agree that having just one person that's supposed to be the guru of some question puts too much pressure on one person. And it's a collective decision. Boards are collective consensus. They don't make individual decisions. They make collective consensus. So they need to be able to ask really good questions. And so not always do we know the answer, but the question is the most important in the board. Asking what is it that we need our directors, our executives to do? What kind of consultants can we hire? What kind of diagnostics do we have the information to see what we're prepared for? And I think that's kind of the relationship between the company executives and the board is really important. And what's this culture of transparency? What's the culture of really wanting to know what our problems are and not trying to cover things up? So I think that's probably one of the big things when we talk about cybersecurity. People are like, well, I'm not sure who knows that information. Well, we need to know that, and to be able to discuss that and say, we don't know everything. Sometimes the board is important to say, we don't know. So how are we going to know? As far as everybody being a generalist, I still believe that everybody needs to have different points of view. So sometimes we're looking for a board, we've got somebody that's got great experience with human resources, great development with people, which I think for me is probably the most important in culture, right? So what are the culture we're creating? These boards need to create a culture of transparency, of really honesty, because sometimes we talk about transparency, like Mauro saying, we have to read the balance statement, we have to know the numbers. Well, those are the past. And we know how flawed it can be to just look at some bottom line numbers, right? So my big thing probably with boards now, and I'm probably on the board, I was always fighting for this. How are we doing things? The board used to be, just tell me what you're doing and why you're doing it. And I'd say, no, we need to know how. And people would say, oh, that's tactical. That's just let the executives decide. I'm like, are you kidding me? We need to be able to know what are the good cultures that we have. How do we make decisions? And when we don't know what to do, can we go up the board quickly and get support? Is the board supporting, or are they just questioning, but there's no support? So I think cybersecurity is a big issue, and everybody needs to be on it. Consultants for sure, and testing, and it's not something that you can leave to be done and it's, oh, check the box, we've done that. It's always moving. It's a moving target all the time.
Yes. And, I want to go back to the company's culture in a second, but moving back to having qualified and staying directors and keeping the board qualified. Do you both see that as individual effort, just like any professional in any field, that you are on your own to try to keep updated? But usually when you think about the executive work, many companies invest on them, right? Going to the board level, I think that today people are just struggling to do that on their own. Do you see companies, big corporations, initiatives to have a budget to keep their board qualified? What's your thought on that? Should it come from the companies or should it be an individual initiative?
Both, by all means. And again, as I mentioned, few companies have structured programs today. And I think there's a cultural barrier, both at the company level and the individual level. I've heard companies saying, we're not going to do this because we have experienced directors, so they don't need it. And
they're supposed to, right?
Oh, yeah. And I've heard directors saying, listen, if I was chosen as a director here, it means that I already know what I need to know, so I'm not going to spend my time in courses. And I've heard that from very senior people. So that type of culture, I think, is an impediment for us to develop the skills that we need.
Any thoughts, Sara?
Yeah, I like the word impediment, right? So what really is causing people not to show that they have some vulnerabilities, right? Because really, I have to say, I don't know everything, So as soon as somebody tells me they don't need to learn or they don't need to study or something, I think interesting because things are new every day. I can't imagine. But the culture of, I would say the culture still, but 20 years ago is, the CEO has to know everything or, somebody has to be really, you can't show your vulnerabilities that you don't know, right? So I think that's one of the things to work with. And I don't think it's possible for board members to prepare themselves only because some issues have to do with the company. So, we do some deep dives, especially when we start to talk about strategy. And I think we've got a lot of companies that are family companies that kind of do this. You get together when you're going to work with strategy and you're going to bring in different consultants, you're going to bring in different people, and you're going to study together the executives, the board members, family members that are involved in big decisions in the business, and kind of everybody get what's new, everybody get what our risks are, kind of the lay of the land of our roadmap of what can go wrong, what we don't know, and then start saying, how are we going to go about this? And bringing in people to help us think about the future, think about possibilities. You're talking about future hack. What are the future hacks the boards have to do? We have to have those moments. There's no way to do it. And some of them are sector specific that you're not going to be able to do for the mere reason that everything has to be your strategy. If it's something about your strategy that has to be learned in the business, we want to really do those deep dives in the business where we can really be talking about something specific for our future benefit and how we're going to win the game of business and what clients we're going to have, what products we're going to do. Those have to be talked about inside the realm of some privacy.
Let me build on one of your points, Darren. You mentioned the CEO, the know-it-all CEO, right? So that problem may be on both sides, on the non-executive directors and on management. And we see resistance to change. We see this insecurity to admit that they don't know the answer. I was in a board once, and the CEO made this statement to summarize the year, and he only brought good things. And then I raised my hand and asked the question, okay, so what was wrong this year? And he said, nothing. It was perfect. Or maybe our stock price could have done better. Now, just to mention one point, 2 people died in our factory that year. So not focusing on the problems to pass an idea of perfection is a very big problem in the board management relationship. So both sides need to understand that they don't know everything. They need to be open to learn and to change. And this has to be done in a candid way, in an environment of trust and openness.
Perfectly put. Like, you can't act on what you don't see. So how even is the board supposed to do their work if the company's the CEO and the management is just focusing on the good things in brackets, right? So coming back to this dilemma of being too technical versus having to focus on strategy, right? Since recently, innovation was often handled as a tactical matter, right? How has this expectation shifted to treat innovation strategically? And what is the ideal level of involvement for board members in a company, in the company's operational matter, right? So, and adding to that, when it comes to being an innovative company, there's often a risk appetite that may not align with the board's risk mitigation perspective. So how can the board position itself as an ally and facilitate the company's preparedness for the future? And that's when I come back to the culture, right? You don't innovate without having this proper culture. And on the same time, when you are, at least when you are studying, I recently did the IBGC course for board members. You see a lot about risk mitigation. So it seems to me that there's this paradox. So how do you see that?
Sarah?
And feel free, whoever wants to begin.
Sure. Yeah, so I think, Mauro just talked about trust, right? And so we've got to have some trust to be able to be open up the risk. I think I really like an author about innovation, Larry Keeley, talks about innovation. And first we've got to find out what our problems are, and then we decide where we're going to innovate. And sometimes we waste a lot of money innovating on whatever. So the idea that I have to know what the problem is in the present and what the problem could be in the future to kind of say where we're going to go with this is one issue. The other issue is to say where can innovation come from that I'm not seeing it, right? So people talk about taking a step back or step up. Board members should be able to fly at 20,000 feet and look out at the terrain and see what's going on. Because when you look up or you look back, you see a different landscape. And that landscape comes, especially with technology, where we can have clients that were clients that they then become the client of somebody else because of supply chain and distribution, because technology can do it differently. We've got to really have this broader view of where things can come from. And I think that those discussions on where we're gonna test, and then I'm part of a startup world as well with Scaffold Education, but also with VR Angels and different things that we talk about with impact investing and startup investing. Angel investing is, what is the minimum viable product that we're going to test? Can we do that? Can we just test how things work? Can we learn and be a learning organization? So I think a lot of the old school way of choosing something is almost this perfection idea. And the perfection idea doesn't really work. You've got to test things. And then I guess the culture is, can we make mistakes? Can we talk about the mistake? If we can't make mistakes and we can't talk about the mistakes, we probably can't innovate, because you can't innovate making everything perfect, So there's the discussion of how much do we study before we do it? How much can we test? What's it going to cost? Can we lose the money? Is it losing the money if I invest in learning? If I invest in trying something new, is that losing money? So, if you look at the balance sheet, you've only got investment, costs, and expenses. Where's innovation? Where is it?
This is great. And let me add my 2 seconds of wisdom here, because this is a learning area for me. But starting from the top down, you mentioned risks, Maria, and the vast majority of boards that I participated on never had an adequate discussion on risk appetite. When that is formalized, usually sits with management, and this is a big mistake. The board needs to own and dictate the risk appetite as well as the metrics, the vulnerability and impact parameters that will be used to classify risk. And this is important because it has to do with that idea of do we welcome mistakes or not? Now, I was once in a natural resources company, and they did a restructuring and put the person in charge of safety also in charge of exploration. And I thought it was a big mistake because one area can absolutely not make mistakes, and the other needs to embrace mistakes and learning. So I think more thought needs to be given to that. The other thing is, maybe one of the best ways for boards to foster innovation is to make sure that we have the right people in the right places. Because again, it is not the boards that will come up and think, okay, this technology is something that we can spend X million dollars on. We need to have good people that have the mandate to innovate. The other thing is budgeting. So I think that most boards are not yet equipped to really allocate capital in a more emphatic way to innovation. But the tool of budgeting is key for that. I mean, how much capital you allocate to innovation, and then try to decide with management how we're going to prioritize and say what we're going to do more or do less. Again, boards are very, very much scratching the surface of that. And finally, one tool that I found to be particularly useful for boards to be more up to speed with innovation is M&A. I was, don't get me wrong, I'm very skeptical of M&A, and I voted against many M&A deals. But I was on the board of a company that was very active in M&A. And by looking at the funnel, which was very organized and very professional, we could see the entire industry and things that were going on that we never expected to, because there are some tiny companies doing things that, oh, come on, we didn't think about it. So even if we ended up allocating little capital to M&A, just the fact that we had a highly professional process allowed us to be open to what was happening outside of the organization. And I thought that this was an amazing experience.
Yeah, you see a lot of, especially with this innovation hubs and looking at smaller companies, what they're doing and what they're bringing, both with family businesses. A lot of family businesses have started investing in incubators, right? So they put in an incubator and say, these are our problems. Again, you've got to know your problems. These are the things we want to work on. It's see and bring in people to try to, almost like hackathons, right? That people bring in different ideas and pitch ideas. It's a lot of innovation. Bigger companies bringing around an innovation group in the company, trying to get new ideas. And one of the things is a little bit what Mauro was talking about, safety. Bigger companies that have longer lifespan probably have more politics, right? They've got policies and procedures and everything's got to check the box and everybody's got to check off on anything to happen. And that kind of kills innovation before it ever starts, right? So a lot of companies, and I think the boards aren't really involved as they should be with these innovation hubs, but to say, okay, we're going to put a certain amount of money and we're going to put a team, and that teams can innovate, and they don't have to be the big corporation with all of the, cross the T's and dot the I's. They can do it like a startup. And then people say, well, what would that be? It's like no rules, right? What's the risk of safety on the far side, right? Nobody's going to die. Okay. What's the worst that could go wrong? How much money could go? So it's a different type of thinking. And I've had a lot of positive changes in big companies through innovation teams. Again, some probably not great when they don't really look at the problems first. If they don't look at the problem and they just start innovating, then they probably don't really make a big inroads to big problems. But I think those are...
And I think, Sarah, just adding one little point to that, there's a responsibility on CEOs to involve the directors. Because I can start asking to be involved in a number of things, and I'm going to be paying for management for a number of those. But if I'm a CEO, and I think that an initiative such as a pitch day is something important for that strategy, I should invite my directors. Come, let's see how it works to make sure that we're on the same page when it comes to something that is not black and white, like hard numbers.
Right, and I think that's right. Most of it isn't going to be hard numbers, right? It's impossible. So we talk about metrics, and a lot of the old school is, show me the numbers, show me the plan, let's plan. And people are just, it's impossible with so many uncertainties to know certainty, right? So if you innovate and you say, I'm only going to innovate in what I know, well, that's not innovation, right? And so I've got a lot of friends from my MBA class of basically checking out of being executives in big companies because I'm sick of trying to prove everything. It's impossible to prove everything. So the board wants proof and they want innovation. Like, what do I do? And I think Mauro's right about bringing in the board. What's the frequency that the board should be involved? And I think we are running a risk. I see a lot of committees that are working monthly. I see a lot of board members that are turning into consultants. With all of the uncertainties, people really pushing up their sleeves to work together. But I think we need to keep a little bit of separation so you have the people who are flying high and looking at the landscape versus the people that are in the 4x4s down in the trenches. And, got to figure out how to do that without everybody becoming executives. And so I think I've seen some concern in the amount of committees and how far people are working inside the company. Possibly that's better than not working at all because you build trust, you build a relationship of understanding what the big dilemmas are, but then you've got to pull back. You got to pull back and be a board.
Fully agreed.
Yeah.
And a lot of interesting points here. And, just back to the culture innovation piece, and just so we don't miss that, we can't really start talking about that without having the right compensation system in place as well, right? Because usually is like you have to give results either per quarter or per year, but if you don't have the long-term piece on the executives as well, because it has to be long-term, right? So I think that if you don't have this piece of balancing, okay, the results that you have to give now, but also thinking on the company's survival in a longer time, which is usually a board's responsibility. But if you don't somehow bring it to the executives, it's hard for the executives to be able to give the time that they need to think on the long term as well. Do you see that's going on as well?
Yes, compensation drives behavior, and many companies try to have dashboards that were very Cartesian in a way, and let little room for subjectivity. I believe that a subjective component of compensation is important, qualitative one, and I also believe that equity grants that are not subject to performance metrics are also an important component because, again, I cannot say, you're only going to get equity if we reach at EBITDA, because that's not going to capture the long-term value creation. Whereas if we're talking long-term, the share price will. So these are some concepts that I think should be had in mind. Of course, you do have metrics that can capture innovations such as percentage of sales from the product, things like that. You can use those. but I still believe that a dose of subjectivity is important.
Yes. So I'd like to move the topic more now to adoption of new technologies. So when discussing that, let's say let's use artificial intelligence just because it's the current trend. But my concern isn't so much about whether a company is going to embrace it or not to stay competitive. I think that's a given in today's landscape. But what truly worries me are the implications surrounding the ethical, transparency, the fair and inclusive usage of new technologies. So do you believe that boards are well equipped enough to facilitate and promote this type of discussions within the organization? So it's not about choosing a technology, and I completely agree with you, Mauro. It's not a board member that is going to do that, but to guarantee that whatever is going to be chosen is going to be used in the right way. And also going back to Sara, that you said it's not just about how you got there, but what you have today, the end, but the means, right? How you're doing that. Is it ethical? Like, is it in the long term going to be good, or is it going to be prejudicial? Is it going to be not equitable, right? And what role should the board play to ensure ethical and inclusive deployment of technologies like AI? Or do you think that this is not something that would be discussed on the board level, but on the executive level?
Let me try to start to take that, because I think it's interesting where that you started asking about technology and you finished your question talking about governance. So I think the problem with emerging technologies is the hype. So it's very sexy for the director to come up to the boardroom and say, oh, what do we do in terms of AI? And he's going to get an answer, but that's not the answer that pertains to his job. So there's a lot of things that go in the background before we're able to discuss that. And these governance issues that you mentioned related to ethics, to inclusion, they go way beyond technology, because they speak to the company's culture. So I like to say there's a lot of hype in ESG, but E&S without a G is greenwashing. And I think that applies to many kinds of discussions. The problem is that technology is sexy and governance is boring. Unfortunately, we need to discuss the boring to make sure that we're addressing the sexy.
Well, yes, I think governance for sure. We talk about ethics, right? And in data. And whose data do we have? What are we going to do with it? What is the risk? The board members have to be asking, what is the risk of our data getting to somebody else's hands? What is the risk of our data getting out? And it's our responsibility to take care of it. So when you talk about AI, then you're also talking about the ethics of what people are and not what we want them to be, right? So when you start looking at data of how people decide, how things are chosen, and where all this data comes from, is from real people making real decisions. And those people aren't perfect. And those people normally are probably, in average, not what we would hope for on our best day. So we really have to be looking about how much we're using AI with our own data and what that data is showing. So there's ways to clean your data. There's ways to look at it. And we need to see what's really happening before we start making decisions with it. I think it's the first thing. And the second thing is to be looking at, do we need that data on people? And where could it get lost if we don't take care of it? So there's, boards should mitigate risk. What is the risk of those decisions? And part of the discussion is, if we allow AI to do simple tasks in the business, that's great, right? Because it's artificial intelligence. So we say, we're going to let it do the intelligence of the processing and not the thinking inside the company. So we could say, okay, yeah, lots of process can be done by robots, can be done by AI. Where's the thinking? Where's our choice? And those are the questions the board needs to be asked. Who's making the choice?
Yes.
Is it AI making the choice? Based on what data? Whose data? Have we seen how they're making a choice? And you've got the big cases of like Apple credit card, right? Of not giving credit to women at the same rate that they give men. And when they looked at the data, well, AI is looking at how people give credit, and people give credit not equitable.
Yeah.
So are we going to let AI make the decision, or are we going to make the decision? So we have a little bit of that. And the other thing is AI is the average, which for me, average is mediocre. And I don't know that I want all the decisions made on mediocre data. So we have to really be thinking about
this. Is great insight. Let me add 2 points of it. And just to show how the traditional framework actually remains useful, and we should focus on our job. Most of the companies that I've worked for, even those that have solid enterprise risk management areas, they rarely have the discipline of ensuring that all board decisions are accompanied by a proper risk assessment. So I've seen billion-dollar projects go to the boards without a risk report based on the ERM. So that applies to AI. If you're making decisions related to AI, they should have a risk assessment. And of course, we're talking about a different type of risk that needs to be studied and structured. But if your company has the discipline that every material item that goes to the board needs to have a risk assessment, that already helps a lot. The second thing is the concept of red teaming. I've been defending that a lot in companies. And by red team, I mean having an area of the company that is really focused on trying to find what's wrong with a given idea or a given project and so on. Very few companies have that ingrained in its processes to make sure that we develop better decisions. Again, red teaming seems to me to be critical to make sure that wherever we're going in terms of AI will not lead to unintended consequences. So again, old school concepts that if we have the culture of applying them properly will allow us to handle with new technologies in a better way.
Yeah, great points. I'd like to go back to one thing that you said, Mauro. And, we can't have this conversation without having some discussion around ESG. And you use the word hype, you said ESG, greenwashing, and, like any hypes, it makes me sad to see not only the hype around ESG, but also the backlash in the US. Because in my thought, if we could just go back to basics to think what it just simply would mean, right? Like a company taking care of the society around them, of the environment, making sure whatever they do, the impact is not going to be damage to the society, and having the right governance in place. And all of a sudden you see all those ratings and all those hypes around, I don't know, buying carbon credits. And then you see as a country like Brazil, in which, I don't know, half of the population don't have access to basic sanitation, and your choice is to buy carbon credits. So, like, where are we going? Like, are we doing that just to have the ratings and to get the investors? Or are we actually doing something with looking inside to see the real impact to the society? And then you see the backlash, which I understand, right? So how do you see ESG actually evolving back to something actually good and meaningful, to just checking the boxes to get the ratings and getting to people's pocket,
Maria, you're going to have to stop me at some point with this issue, because I just gave a talk at the IBGC Congress that touches precisely on that. Again, we should go back to basics. I think the problem is that ESG is being driven by the wrong reasons and by the wrong players. Companies are taking these measures as a sort of a social response to the media, to society, and so on and so forth. And I like to think that we don't need to resort to stakeholder theory to think about sustainability. If you go to the bylaws of every single company in Brazil, you're going to see on Article 4 or 3 that the company's time frame is unlimited. Unlimited means forever. It's longer than the period that you can model on a spreadsheet and discounts to a net present value. So the bylaws are the mandate that shareholders give to managers. So it is in the fiduciary duty of managers and directors to think about sustainability because they need the company to survive for the very long term. So when you think about this way, instead of getting pressure from the media and some idea of do-goodism, we have to understand that our shareholders, and I go back to Milton Friedman here, who was not that wrong to start with. He was very clear that companies had to do things for the society in their own interest. And if you think of the fiduciary duty of directors and managers to the owners, they have to take into account ESG. So if we do that, we have a very clear path to understand why these companies need to do better in relation to externalities that were previously not included in the financials. So one of the consequences of the drive of ESG coming from the wrong path, in my opinion, is that many companies have a specific area for sustainability. And this can be, something you do in the beginning, just to get going. But in the end, it's not positive because it is not becoming something hardwired into the company. Again, let me give you another example. I was in a company that was pledging to use carbon pricing for all its products. Then at the board, it received a very large project with a viability study that did not include the carbon pricing. Why? Because the area that did the projects was not talking to the sustainability area. So it needs to be something, we need to have a single governance. Sustainability needs to be attached to strategy, not to marketing or to investor relations, as it is in the organization chart of many companies. I'm going to stop there because otherwise I'm going to monopolize time.
Yeah, so I think there's the idea, especially when you're talking about public companies, when we've got people are making decisions quarter to quarter and their stock prices are going up and down based on lots of really short-term issues. It's very hard to get long-term vision. So I would hope, and I'm not sure that that's actually happening, is that investors start to have a broader sense of what is sustainability and ask better questions that aren't just quarter to quarter. Because, like we're talking about innovation, if I invest in innovation for something that's going to be for next year, for the year down, and it's looked at as an expense or a cost, and it's not really an investment, well, then I'm tying the hands of the executives and the board to do a good job. So I think with family businesses that I work a lot with, family businesses, what we're working on, and I think the family business has that a little bit better, especially when they're private, but also public, but usually not totally controlled by the public. What the public is doing with buying and selling the stock isn't necessarily changing what the company does. We need to be looking at what is the mandate for sustainability. And Mauro's right. And that mandate has to look at stakeholders. It can't just look at the shareholders. It has to look at sustainability on a broader landscape, bigger picture. And that's happening to a lesser extent. And if that's really not happening, then it's really hard for executives and board members to do a good job. So then, say, why is it so easy to greenwash? Because the people who are buying the product, really, that's good enough for them. So with social media and with information about what information is getting to people. So there's an information gap as well, right? So media is really easy to make the hype, and then people can make hype on something that's not sustainable at all. Not even economically, not for any shareholder. So I think is back to basics about Mauro is ethics, transparency, in this broader look of the company. It's not the company's fault. It's usually, we're all integrated in a big ecosystem. We have to get everybody looking at those factors, right? But we do. And I think the big thing is the integrated ESG isn't something you put some numbers down and say, I got some materiality check. It's how we look at business, how we look at what we're doing, what are the impacts that we're doing. And that's a harder change, and it's a culture change. But that's the culture change that probably is the most interesting for society.
And I think one key thing that tries to address this issue, Sarah, at least in the realm of public companies, is stewardship. And I've devoted my last years at AMEC to try to spread the concept of stewardship, which is the concept through which institutional investors need to act as owners. So again, if I'm buying the stock in a company that says that it has an unlimited time frame, as an owner, I must engage with that company to make sure that that is happening. And I see a lot of reductionism on the part of institutional investors because these companies became huge. BlackRock manages $8 trillion. So they need to automate everything. And this is the drive behind this standardization of metrics. And quite honestly, this is the best way to ensure that greenwashing is not happen, because you cannot boil things down to single numbers. Of course, we can try to get more standardization, but you're only going to check whether the company is acting in a sustainable way if you sit down and talk to them. It has to be subjective, again. And this takes time, it takes effort, and it's called stewardship.
I think that's a great point of the subjective part. And I think that's part of the thing that we miss in business is everything has to be so, have to have a metric for everything, has to be really clear, objective, and then we have to make a bunch of subjective decisions. It doesn't match. And that's something that we can do better. And you talk about, ESG with materiality, and then you put AI on top of it, and then you put AI in a robot deciding who's buying and selling stock. Where's the subjective decision of the shareholder, right? And I really like Mauro's point that people have to act like owners. And so you talk about family business, which when we look at owners, we say you want to work from one generation to the other. What's going to make what values, what legacy brought us to today, and what values and inputs are going to get us to the next generation. And what's changed for us probably on family business is velocity. You can't wait for the next generation. We've got to do it together. And what we're looking at is, 3 or 4 generations working together, which is diversity. 3 or 4 generations looking at things differently and bringing mandates that, help us look into the future. Hopefully that'll make a big difference. And I think family businesses have something that we've lost with media. It used to be, it's one of my pet funds to give money to is local newspapers. So it used to be that you believe and you have trust in local newspapers because the tree that fell over and caused a problem, you see the tree fell over and it's in your neighborhood. But when we just get news from social media and we get news that doesn't really relate to our day-to-day, we have a problem that we don't trust that news. And if the news is all about likes, we also have reasons not to trust it.
Yeah.
So where are people getting their information about the business? Family businesses are part of communities, and the closer they are to the community and the closer they are to what's happening in the community, probably gives them a higher trust bracket than other companies. And so what we see now is, who are people trusting about decisions, about information, about transparency? And family businesses are something that's really changing the trust factor. But we need to work on that. And, one of the things we talk about in family businesses, most of us are low profile or to no profile. But with this world, the way it is, we have to share. We have to share information. We have to get out there and do it in a way that we can build trust.
Such a rich discussion. Unfortunately, we're almost running out of time. Can we have a last question, last discussion? Can we do that? Yes,
sure.
Mauro as well?
We can try.
Can try? Okay, so, we can't end this conversation. We are future hackers, so I have to ask, what's your view about the future? So what do you foresee as the future of boards? Like, will the traditional model of those fixed boards with, relatively long tenures, limited involvement in the company's tactical operations, will it persist? Or do you see it evolving in a different way? And, how do you envision also new technologies affecting this decision-making process? Or maybe in the future, we are not having boards as is. Maybe you're just going to have this group of advisors changing. What do you foresee? And just playing around, right?
Sarah, want to start?
Sure. Well, I think on the trust factor, having me from having boards, being on boards and bringing new people on boards, the best question is why? Why do you do it that way? Why don't you do it a different way? And new people ask great questions. But if they don't have more experience in the business, they're not going to actually contribute maybe to solutions. So I think we have to have a mix of new people coming in, asking whys, asking the information maybe about where the risk, because as soon as you're too close, you don't see risk. Whatever you're used to doing, then becomes not risky. So we need to have a mix of new people and more experienced people all the time. I see boards getting bigger, not smaller, because of more diversity. I'm a little concerned that boards might become too profile, like you talked about. Oh, we need somebody for inclusion. We need somebody for this, somebody for that. I think we need to really not go that route, but that is a risk, and I think it's a risk of almost an oversight in compliance instead of group decisions and guidance. So when Mauro talks about stewardship, I would hope that we go for stewardship and for guidance and not for compliance only. But I think boards are more important than they ever been.
Well, Maria, I think your question is great, and I'm struggling with it because I also believe that in the future, we're going to need something different. That being said, right now, I've put in a lot of effort to make sure that boards work as they should, because most don't. So, and go back to Sarah's points of the why, I would add one why idea, which is, why is that person sitting there? And that has to do with board evaluation, succession planning. How long should the director be on that board? Do we have a target for that? Because there is a learning curve, and then a period when the director sort of becomes stale and eventually counterproductive. So boards need to discuss that and make sure that they plan for their renovation with time. But again, this is to make sure that boards work as they should in a traditional model. In parallel, we're seeing all these this acceleration and all these changes, and it seems that we're going to need some sort of new organization, but I still don't know which. The point is, at the end of the day, you need a group of people, and it needs to be a group of people that is accountable, and that is the definition of a board. So in my mind, I can't get out of that tautology. But it is something to be challenged, because the way boards are working now is really slow in relation to the evolution of the needs. So maybe we're still gonna have boards, and I'm thinking as a speaker here, so apologies for that. But I think we're gonna still have boards, but they will need to work in very different ways.
Thank you. Sarah, would you like to say something else?
I was just going to say that, we've seen changes of activist board members, activist shareholders that buy into companies to be able to help to accelerate change. Sometimes in a very aggressive manner. And I think to Mauro's point, if the boards aren't working well, what is the society's ability to go in there and say, you got to make it differently? And currently, the only way is these activists coming in. And I'm not sure that those are actually good choices. So I'm not sure that I know the answer as well, but I think the answer, why are somebody here? Why is it so slow? Why are people becoming that the board is their job? It can't be their job. They have to be looked at as owners. They have to be accountable, like Mauro said, but they also have to be there for the time that they're good to be there. And I think there might be some evaluations coming for how that works. So, but I always worry about these evaluations, because then you have outsiders making the decisions. So it's complicated.
That was brilliant. Thank you so much, Sarah. Thank you so much, Mauro. It was a really rich discussion. I really appreciate you both being with us today. And thanks, everybody, for listening.
Future Hacker. Life. Path. Future.